Makes sense. I want to change the tone of the conversation a bit right now. I want to come back to family offices. Personally, I've been in this space for some time, and it's very curious for me about how you build that relationship with family offices. And they're very trust-led, and I've generally seen it's very hard. But you've been so far able to really crack it. I want to hear your insights about how one should think about family offices. What are they really looking for when they're looking at partnering with uh, firms, investment firms, or even with founders?
I think the concept of family office has evolved over a period of time. I think the one of the reasons that we got into managing family offices was when we were just investment bankers. One of the families that was investing in a deal with us, where we were not with us, and we had not yet had that idea of investing yet. And one of the families that we continue to manage even now after 10 years, they said, you guys are selling the hell out of this deal to us, but you're not putting a rupee yourselves. So what's the deal? So I said, oh, I didn't know that an investment banker can also invest. They said, why not? I mean, who's written the rules? You write your own rules. And that's how we started. So that was our first seed investment, and the only seed investment that we've done in our journey was in a fintech called Neum, which is now a unicorn. I think they were last valued at either 2 or 3 billion. We continue to remain shareholders even after 12 or 13 years. But that's how we entered into investing and also managing at the same time. And what we've done, Shubham and everyone, is we've understood what value we can offer, and we have stuck to that. So these families that we work with, they have continued to have a wealth manager to manage their wealth in stocks, mutual funds. They continue to have a real estate advisor for their properties. We only work with them for their private investments in business. That's our expertise, and that's where we limit ourselves. We don't try to say, okay, let me also now use this relationship and build an opportunity to build a wealth management firm on top of this. I think that's where we have drawn the line. What they like with us is that when we are evaluating a company, they know that we have our certain metrics in mind that we would use to evaluate. They just join us because they know that they are only going to be shown things that we are investing in. So we know our limits, we know where we can add value, and we're only playing in that field. And I think that's what a lot of them like, and that's what they will continue to like, because family offices are literally now becoming smarter. They're building their own teams in house. Uh, you would have read a lot of reports that, be it US, Europe, Middle East, Asia, a lot of families are investing directly. They just have to hire one or two people and one or two good, smart folks who are already in private equity or venture capital to manage it. So one has to understand the lay of the land over there. That's evolving very fast. And they always want direct access to transactions. So I'll tell you this, from Jan to now, I've had so many requests where Indian investors, Indian family offices want to invest in Anthropic, want to invest in OpenAI, they want to invest in Anduril, SpaceX, and they want us to help them find access to such opportunities. Unfortunately, because of the structures in India, you can't take too much money out due to LRS. You have to do it via Gift City, etc. So an Indian family office is still not considered. I mean, those who don't have an overseas structure, they're not considered to be the folks that can close a deal quick, because international deals, you need to close things very, very quick because everything is ready. You have to do that. So I think as the ecosystem evolves, like I told you, the startup ecosystem evolved from what it was in 2010 when I came into where it is today. The family office ecosystem is also evolving, and with the emergence of Gift City, hopefully it will prove to be a good sort of conduit for Indian investors to invest in international assets. And I think that for me is the evolving landscape as of today. I've also seen family offices open their purses to making local Indian investments, Indian investments. That until 2017, 2018 was very scarce. So they are getting smarter. They will work with folks that can add value, and they're okay for that value to be in a very focused manner.
Understood. However, when I've seen that usually family offices, when they come in, they want to be really, as you mentioned, they really want to be part of the deal. And how do you manage that when you're actually dealing with so many family offices? Do startups that still get invested by you get that access to these family offices and their businesses? Usually their businesses bring in some additional help I believe, when it comes to any business, right? How does that happen? How does that
I think
expertise?
I think you have to put this in two buckets. One is where they're making passive investments, where they know that we are involved in managing those investments. So those could be in early stage companies. And then the second bucket is the strategic investment.
Yeah.
So if we have a family that's in the nutrition space, right? So they are one of the largest in nutraceutical ingredients manufacturers. The way that they look at the way that the three founders there look at the passive investments and they look at the strategic investments are very different.
Mm.
Because while all the three have their family offices, finally, when it comes to a strategic investment, they will link it back to their balance sheet of their business, not of
Yeah.
their personal. So these are the two buckets that they operate in. I think we are largely skewed towards the first bucket, where they're looking at passive investments. They want to diversify, they want to explore, and that's where we sort of come and add value for their business anyway. There are a lot of people in the ecosystem that come and show them potential transaction opportunities, which we also get involved at a later point in time. But we don't actively scout for their business-led opportunities.
When a family office generally evaluates versus, let's say, when a VC firm generally evaluates, they're really different. And at the same time, as an extension to this, what's probably the best way to approach in general investor? And I'm probably asking you this from your experience as an investment banker. How would you approach, let's say, any investor if it's going to be for the first time?
I think, see, whether it's a VC, PE, or a family office, I think one is down to the relationship or the rapport that you can build early on with someone on top. I'm
Mm.
not saying that the team members are not important, but if you have a rapport with someone on top, so let's leave out the VC piece. Let's just focus on the family offices. If you have been able to build a rapport, strike a chord with the person that's part of the family, then I think those deals close quick. I think the nice thing about family offices is that they're able to make decisions much more quicker. And the idea is to go prepared, because the reality is that they know their business really well. They don't really know your business well, but they want to put a small portion of. So they usually put, I would say, 1 to 2% of their wealth in the alternate ecosystem. If they're very, very sort of early to investing, right? The ones who have invested, made money, are also doing seed deals. I think seed deals takes a different kind of
Yeah.
tenacity and, guts to have, right? Because you're writing 100, 200 checks at a time over a period of time, and out of which only a small portion of that will actually do really well. So I think if you want to build that rapport, you need to be very, very clear about what you're doing, and you don't need to lie. A lot of them come and lie about the market size, lie about their business, represent their numbers in a very wrong way. Now, look, you have to understand that these are also business people. They understand some of the fundamentals of P&L. They understand the fundamentals of unit economics. They will do those hot and the trendy deals if some of their friends or someone recommends and says that, hey, look, you come in today and you can exit in 1 to 2 years. They will do a very small portion of that. But they are actually in the alternate ecosystem because they also feel that they want to add value in some shape or form. Maybe not strategically to your business, but at least from a governance, learning from some of their mistakes. They also want to be a guide to you. So you just have to be honest, represent your numbers the right way, and I think go prepared. I think a lot of them, what's happened in today's ecosystem is that everyone thinks they will email or they'll WhatsApp someone and then expect them to write a check. To win a family member's trust, it can take one meeting or it can take 10 meetings. It completely depends on how you are able to explain your business in a simple way. And which is why you're seeing more and more family offices flourish in India. The number used to be a handful in 8, 9 years back. I think it's in the hundreds today.
I resonate with you when you say that. Just be honest. I was working on this one startup right now. I faced a similar thing. Then they mentioned in the slide something, and they were not trying to fabricate anything. They were just being founders. They were just trying to sell themselves much better. They were not trying to fabricate anything of that sort. But I remember the next conversation I'm having with uh, an associate friend of mine in a VC firm, and they sort of catch that in an instant that this is not the right number. I can see the financials, I can see these things. It's not lining up, and this was probably one of the biggest red flags for them that they had. They didn't think that they were fabricating it, but they just understood what's happening. And yeah, I think it matters a lot. Sometimes the intent is the right in the right place, but how you still communicate, how you still present matters a lot.